Zacks rank buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks rank buys. Time to cover a couple of more growth and income stocks now with Alex Kolb, our growth and income stock analyst at Zacks.com. I want to talk about ROST stores, ROST, the ticker symbol. They are the second largest off-price retailer. What does that mean, off-priced retailer?
They're basically a discount retailer. This is one of those companies, being a discount retailer, it's operating in this environment, it's doing really well right now. And they offer, discounts anywhere ranging from 20 to 60% off of just your average retailers, the designer type retailers. Mm-hmm. So being a discount retailer is really benefiting the company. Being a growth and income analyst, I always like to highlight that dividend. As you can see on this slide, it has an annual dividend of 44 cents, which translates into a yield of 1.1%. For its industry, that's actually a solid yield. And as I was saying, that it is doing really well in this environment. Its share price is one indication of that. This slide shows how well it's doing against the S&P 500. One thing I want to mention about its share price, it's right now trading around $40 a share. That's an all-time high for this company. And if you're to look at the fundamentals, my opinion is that's not going to be resistance. I think it's going to go higher from the $40.
Yeah, I was going to say, does that mean it's peaked?
I don't believe so in this particular, in the economic environment that we're in. And also, again, if you look at the fundamentals, they're pointing to even a stronger share price. And I can go into the fundamentals right now.
So by the time this cycle is all over with, it will have maybe set a new range, a new trading range for itself?
Yeah, I think 40 will probably be, it'll jump up higher from the 40 level that it's trading at right now, even though I think 41 something is an all-time high for it.
Okay.
So as far as the fundamentals, the company did recently report March's sales. Overall sales were up 8%, and comparable store sales went up 3% for the month of March. Based on that upbeat report, the company increased their projections for sales going forward and also for their earnings guidance. And on this chart, as you can see, analysts followed suit. The estimates from brokerage analysts are on their way up for both the next quarter, and for the next couple of years.
All right, and then there's Watson Wyatt Worldwide that you want to tell us about. That's a global consulting firm. Where's the growth? Where's the income?
Income highlighted here as well. 30 cents is the annual dividend, translates into almost 1% yield for this industry, also solid. And growth is, again, here's also in the fundamentals. I want to take a quick look at the historical growth first. Mm-hmm. It's showing here, as you can tell, it has outperformed estimates dating back to July of 2004. Right. It has never missed analyst estimates, only has one match. And again, if you look at fundamentals, I think more of this is to come going forward. The company has a great balance sheet. It has very low debt. As I show in my chart here, the return on equity is 18%. That beats the industry average. And the company's net profit margin is also ahead of the industry average. I might also add a couple things here. In its second quarter report, earnings were 93 cents per share. That was 21% above the consensus estimate. And going forward, the company is going to report in early May, and estimates are on the rise for that quarter as well.
Do you own either of these two?
I do not.
Read more about the different growth and income stocks that Alex has written about recently at Zacks.com's homepage in the upper right-hand corner, where all of the Zacks rank buys are listed. Just click on the headline right next to the growth and income selection, and it'll take you right to his most recent stock profile. With Alex Kolb, I'm Terry Ruffalo.